Hi there. I'm Mark Sebastian, and this is the option pit method on holiday trading, the Santa strategy. So, before we get started, I have to do the normal, look out. If you lose money, this is your fault. It is your, it's not my problem. And, that's just the way life is. So that is the key here, is that if you lose money, it is your fault, not mine. For those of you that don't know who I am, my name is, in fact, Mark Sebastian. And I was a floor trader for about, 10 years. And then I started Option Pit. When people ask about Option Pit, they ask us, okay, what are you really about? We are in the business of teaching you to trade like a professional. I'm a professional. Everybody that works here is or has been a professional full-time trader. That's been their job. If you're listening to this, that's some off chance that is what you want to do with your life. At a minimum, you should probably be thinking about how someone like me wants to trade, because that's what you're doing. So, what are we going to talk about today? We're going to talk about what is insurance and what is option decay. And I'm going to talk about how the world views options. And then I'm going to explain to you, and this is the first part you're really getting wrong, is how option decay really works. I'll walk through holiday decay. I'm going to go through my secret Santa strategy, and then I'll have a little important announcement at the end. So, what is insurance? Insurance is protection. We buy insurance to feel safe. All right. It's the person that has a lot of insurance is a person that wears a belt and suspenders at the same time. You buy insurance to feel safe. Insurance protects us from a loss. You buy insurance because you don't want to suffer some sort of catastrophic loss, be it a car, be it a house, be it a life. All right. And insurance, again, is something you don't want to use. And this is really the important part. Insurance is something you don't want to use. You don't want to use insurance if you buy life insurance. I mean, I suppose if you buy life insurance as someone you don't like, maybe then you'd want to use insurance. But generally speaking, the insurance I buy is on myself and my wife, and I never want to collect on my insurance, and very rarely do I want to collect on my wife's insurance. Do I want to cash in on a homeowner's policy? I can tell you, we had to cash in on a homeowner's policy over the summer, and it was not a fun process. That means I'm getting stuff fixed, and it was nothing but annoyingness. Do I want to cash an auto policy? Well, when I cash an auto policy, it means I don't have my car. My car is getting fixed. It means I probably got hit, or I hit somebody else. It means I was put in danger, right? Home insurance, maybe put in danger, maybe not. Car insurance, maybe put in danger, maybe not. And life insurance, you're probably in some danger, probably dead. When you buy insurance, you don't want to use it. Right? Insurance is a loser. So if I was going to describe options in one word, all right, I would describe it as insurance. All right. And why? Because options insure us against investment loss. I buy calls to insure against the loss of dollars in a long stock position. I buy puts to insure against the dollars loss in a short position. So think about that. I buy calls because I sell the calls, or I sell the stock and then buy calls instead of stock. If I buy the calls instead of the stock, then if the stock goes up, I make money. If the stock goes down, I don't care that much, other than what I paid to buy those calls. The calls are the insurance portfolio. All right. I buy puts to insure against the loss from being short stock. So I can sell stock, and then if the stock goes up a ton, I get my face ripped off. Ask Tesla owners how they feel about that. Or I can buy puts. And if I buy puts, then all I'm going to lose is what I paid for those puts if the stock goes up. All right. Generally speaking, investors buy options because they don't want to use them or because they don't want to actually own the stock. They're buying options to avoid things. All right. So, and here's the important part. Do insurance policies last forever? There's Leisha walking by in the back. Do insurance policies last forever? No. They run out of money, right? I have to re-up my homeowner's policy every year. I have to re-up my auto policy every 6 months. I have to re-up my life insurance policy every month. If I don't, it goes away. Right? That loss of value, that expiration, is called time decay. Right? Options, like everything, decay over time. They lose value. Sometimes it's called theta. You don't need to worry about theta. So the thing is that here is how the world thinks options decay. The world thinks that option decay is this nice, smooth, exponential thing. It's just getting more and more decay every day. Every day, more and more decay until we get to the end, and decay is exponential. That is the way the world believes options actually decay. All right? At 30 days, they begin to lose money. At 8 days, they lose even more. All right? And until then, it's kind of smooth. Pretty darn smooth. And then you kind of get a set off a starter gun on at 30 days, and the final sprint is the last week. Well, guess what? All right, not how it works. Here's another view of that decay, right? You can see that exponential decay developing, right? Here's today, and what I want you to notice is that every week in here, the spread between the colors gets bigger and bigger. That is the exponential nature of decay that we think exists in options. But is that how options really decay? That's the question. Is that how options really decay? No. No, it is not. Options do not decay smoothly. All right. Options decay in fits and starts. All right. It is constant according to the pricing model. Trading is not constant. All right. Decay is constant And we have days off in the middle of the week, like we do next week. All right. So here's more what decay actually looks like. If I was going to draw a chart of how options decay, how they lose premium, it would look something like this. And the point being is that I go through periods where it doesn't decay or it actually gains dollars. And then I go through periods where the decay is incredibly high. Right? Decay goes through fits and starts. Say hi, Alicia.
Hi. Hi, everyone.
So decay. Oh well, that was her in the pink walking behind me. Decay stops and starts and stops and starts. You know, a lot of us, if you think about decay as driving an automobile, think of decay as instead of driving on a rural road at 55 miles an hour, think of it as driving through pockets of stop and go traffic, where you go from 80 miles an hour to 20 miles an hour to stopped to 70 miles an hour. That's really the way decay works. It stops, it starts, it stops, it starts. It speeds up, it slows down. It speeds up, it slows down. All right? So, think about fits and starts and how we think holiday decay works. All right, now that you've seen that, let's talk about the holiday. You have fits and starts. Do we think that if I sell premium on December 24th, the open of December 24th, so it's 8:30 Eastern time, or 8:30 Central time, 9:30 Eastern time. If I sell on the open, am I going to get, and I buy back on January 2nd? All right, so looking at our calendar, if I sell the morning of the 24th, I have a half a day open. I'm closed on the 25th. I have a day open on Thursday. I have a day open on Friday. We're closed for the weekend. I have a day open on Monday. I have a day open on Tuesday. We're closed on Wednesday, and then I buy the morning of Tuesday the 2nd. So we have, over that period, 9 days. We are open for trading on 4.5 days. Right, 31st isn't a half day, is it?
Yeah.
Oh, it
Yeah.
isn't? It's a full day. 31st?
Oh.
It's a full day. It's a full day.
Sure?
I think so.
I think it's half.
I think that, well.
I'll have to look.
All right. Well.
FYI, Scott said super busy today.
Yes, that's interesting.
I know. So put that in your disclaimer.
It was super busy today, folks.
With the market moving.
Yeah. So I dumped some longs today. Have
Talk to you in the morning.
a good morning. Have a good night. Enjoy Butch McGuire's.
Enjoy.
If you're looking for Alicia, she'll be at Butch McGuire's later, folks. So.
Choo-choo. Bye.
Bye. So, if you are selling the morning of the 24th and buying back the morning of the 2nd, 9 full days, 4.5 of them are open for trading. Do I get 9 days of decay with only 4.5 days of exposure? What do you guys think? No, 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 no. I'm seeing lots of no's. Good. The answer is no. All right. Now, I'm speaking to a relatively smart audience. What do you think if I pull someone off the street that just, you know, they're watching some network TV, they're watching an internet TV show or something like that. What do you think that person thinks? Think they get all that juicy premium decay? They think they do, but they don't. All right. The answer is no, you do not. And here's why, and here's what you guys forget. Market makers are not stupid. All right. Having been one, I can tell you, I am toward the dumb side. And if you think I'm smart, well, now you know what you're dealing with. So, it's front running is the wrong word, but they front run the days that they're closed. Without getting too deep, all right, you can go on a blog that I wrote last week. Market makers time travel. They time travel. All right. And then this has to do with the sophistication of them and their ability to manage the portfolio. All right. Here's what they do. Yeah, they move volatility, for those that know what that is. But here's what I want you to think about. By the Friday before Christmas, market makers have time traveled S&P 500 options all the way to New Year's. In fact, if they do anything wrong, it's really not them, it's more BDs and other people like that. They will over decay options ahead of the New Year's. This means that on the 24th, you're more likely to see options too cheap than too expensive. Let me put this a little easier to understand. All right, but we're going to start with rule 1. This is the rule 1 of traders. All right, rule 1. If you think you are making an easy edge, you aren't. If you're like, wow, I can't believe they'd let me do this, the answer is they are not. You are wrong. All right? You are wrong if you think you found an easy way to game the system. All right? If you can think of it, guess what? A professional full-time option trader can too. Earnings, holidays, events, market makers know about these things. All right? You are really smart. These people are paid to know this stuff. It is their full-time job. If you think you are gaming these people, you're wrong. All right. So, rule 1, the real rule. There is no easy money unless you know something others do not. Most of what you know is well known. Just the way it is. Rule 1. Unless you know something that somebody else doesn't, there's no easy money. And guess what? You don't. So let me talk to you about how market makers manage the holidays. We have the ability to speed up time. I can make my clock on my machine speed up. So for every minute that passes, maybe 70 seconds pass, in my machine. So you think options decayed 1 minute or 1 hour. My machine thinks options decayed an hour and 15 minutes or 2 hours. So I'm going to speed up the decay on my machine when I know I have days off, so that by the time I get to the couple of days before that holiday, I have priced out any of that time off. So then you get to, let's say, the 24th, the morning of the 24th, Christmas Eve. The greatest gift, if you want to be the Santa to market makers, all right, if you want to be the market maker's secret Santa, sell them options on Christmas Eve morning. Sell them options on Christmas Eve morning, because you are giving them free money from the internet. All right. When they get to the 23rd or 24th, they actually take their clocks and flip them the other way and actually slow time down. All right. So normal period of time heading into holidays, you're a runner, they're the flash. Okay? Then we get to those holidays, you're the flash and they're the runner. Except for the flash is wearing lead boots and can't run fast. There's no money for the flash. So time slows down over the holidays. So what can you do? You sell early. If you want to sell Xmas Premium, really do it today or tomorrow. All right. If you're short premium, buy back early. Buy back on the 24th. Sell your premium the weekend after New Year's. All right. We come back on the 6th. Sell it then. Buy late. You want to own options? Buy next week. Buy on the 23rd or the 24th. Perfect time to own options. You almost get a free look at movement. So for 9 days of trading, for 9 calendar days, you're only paying for about 4 days of premium. All right, so I promised you I would tell you my secret Santa strategy. And I'm going to use the acronym SMIRC. 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 So, what is my secret Santa strategy? This is a strategy that will generally make good money. All right, so what do you want? You want the S in SMIRC is stock near a 52-week high. All right, the M is for Momo or momentum. I want momentum. All right. The I is for implied volatility. I want the implied volatility of the option at or near a 52-week low. I actually want it at the 52-week low. Has to be the cheapest it's traded all year. All right, then I want to R, review the chart. All right, I want to review the chart to make sure I'm not missing anything, making sure it's not topping or at a pivot point or at a major resistance level. And then finally, I want the calendar to be the 23rd or the 24th of December. That is my secret Santa strategy. And why do you engage this? Because you will get a free upside look. Not free, but a borderline free upside look. If the stock sits there, you won't experience a lot of decay. Yes, it's a call buy. There is, just to remind you of what a SMIRC is, my strategy, the Secret Santa strategy, is a SMIRC. Stock near 52-week high, lots of momentum, implied volatility at 52-week low. I want to review the chart to make sure I'm not missing anything. And I want the calendar to be the 22, 23, and I'm going to engage it. Then I engage bets. All right. And if you want to know what a SMIRC looks like, the Mnuchins can absolutely tell you. One of the most disappointing things that ever happened in my life was this picture coming out 2 weeks after Halloween instead of 2 weeks before Halloween. I had talked to Lauren literally the month of, my wife Lauren, who's a beautiful blonde bombshell, about us being the Mnuchins. She's actually a famous actress, or a semi-famous actress, and I could have been him. So we were going to be these two for Halloween. But she's like, no one will get it. And then this picture came out right afterwards. And the problem is this is a couple years old. All right, so you guys want to walk through a SMIRC example. All right, so remember, stock near 52-week high, Momo is even stronger when volume is low. So why does this work? All right, stock is near a 52-week high, tends to keep going. Momentum is even stronger when volume is low. And volume is at its absolute lowest during this period of time. All right. On the 23rd, if the IV is at a 52-week low, you know for a fact that all the decay has been taken out. All right. Not for a fact, but you probably. All right. Then we're taking a look at a chart to make sure we're not at some pivot point or something crazy. All right. And then the calendar is on the 23rd or 24th so that we can know that we are getting a free look at upside. So let's take a look at an example. All right, I'm going to pull up Live Vol Pro here. Oh, one up there. Lots of good questions. So you're not really looking. So a good question was, how much you're looking for vol to pop? You're not really looking for vol to pop. What you're getting is a call that doesn't decay. So you have what's really a free look at the underlying. It's like you know, getting a bet for no close to nothing. So a name that I was looking at that may develop is Alibaba. All right, let's look at a stock chart of Alibaba. I'm going to go to a one-year chart here. And you can see it's at a 52-week high. And boy, what a run. If I go to a 5-year chart, it's even above the highs that we saw. You know, it's almost to the highs that we saw 2 years ago. We go to 2 years. Almost there. I can actually see, I love it when within the last couple of years it's been more expensive, but it's not been more expensive this year. All right, now, I would love for someone to argue with me that this stock doesn't have momentum right now. This stock has momentum. Right now, what about implied volatility? Well, I'm just going to go ahead and say the implied volatility is the cheapest that we have seen in a very long time. It is at a 2-year low. Is it at a 5-year low? It is not at a 5-year low. The only time it's been cheaper in the last couple of years has been briefly in 2017 and briefly in 2016. All right. So now, obviously, looking at a chart, I don't see any pivots. I don't see any resistance. Right? I think it's going to go above 2010. So now I would engage bets, right? Background energy, time, and strategy. All right. Well, our calendar is not on the 23rd or the 24th yet, so we're not quite there. So I think Alibaba Vol is going to get cheaper, not more expensive. But I would use my background. Background, obviously, you know I like Alibaba. We just had a Chinese deal get signed. The market is strong. Lots of good things there. It's got tons of energy. The time. This is where I look at term structure. And I'll tell you, I'd be looking at the January 3rd strike. And then my strategy, in this case, because it's a straight directional play, with vol at a 52-week low, I'm a call buyer. Really plain and simple. Makes sense, right? All right. All right, so there's a good example. So what is my major announcement? So we have taken on in 2020, we are entering in a joint venture with Hedge Spectrum Partners to launch a whole new suite of products and kind of redevelop Option Pit. And what we're going to do is basically kind of simplify and merge many of our products. Almost all of our almost all of our products are going to be either going away or going up in price. We are going to be kind of changing everything. But what I'm allowed to do is into the end of the year, I'm allowed to grandfather people into programs. So because you're here, I want to give you what I call my you know, what I'm going to basically say is the closing price on silver. The silver membership will continue to exist for people that have it. If you are a silver member, a gold member, a platinum member, we're not going to take it away from you. You're just not going to be able to buy it if you don't have it. So the silver membership is $1,500 in the store. You can no longer buy it month to month. And it is a unbelievably good product. What is it? Well, you meet with me and Andrew twice a week in a group. He and I BS around, we chat, we look at trades, we talk about what we're doing. We develop our best idea trade for the week. All right. Currently, we've done about 10 trades. We've had 8 winners and 2 losers. As of yesterday, we were up 52% in 2.5 months. Now, what you'll really like is that you're going to get text alerts that tell you when we're putting on a trade and the price, and when we're taking off a trade and the price. Really simple, mostly long call, long put. There'll be a little bit of spreading in there. You get our weekly shows. You get access to our silver membership education. So it's a 6-part, 6-hour course. I am throwing in Options Made Easy, which sells at $250. All right. We keep track of all our trades. You get this great 8-page report with kind of a life lesson on trading, what we think of markets, and what we think of, and a trade idea with text alerts. And you get the Option Pitch show twice a week, and email and phone support, and you get Options Made Easy. The product's worth well over $2,000. If you sign up by Christmas, my Christmas present to you, I'm going to grandfather you in at this $1,000 price. I'm going to let you be a silver member for $1,000 for the year. All right, and when you re-up next year, we'll let you keep that $1,000 price. But that offer goes away on Christmas, and if you don't pay the full $1,500 price by January 1st, you're not even going to be able to buy the silver membership anymore. It's going to go the way of the dodo. It'll be a secret knock society for current Option Pit members only. So if you want access and engagement with a silver membership for an entire year, you got to go to optionpit.com/xmasgift, and you got to sign up by Tuesday. All right. And here is what I will do. The last thing. All right. If you sign up today, so right now it's 4:15 Central Time. If you sign up in the next 18 hours, I will rebate back an extra $100. So it'll be $900 for the year, and you will pay $900 for the rest of your life. And someone's asking for, well, what does the Option Pit Silver membership look like? I'm happy to show you. You can see our trade record right on our homepage. And if you want to see our silver membership, you will love I talk about who's making money, talk about the markets, I talk about the trade. You're going to get all kinds of information. Trade on the top, trade on the bottom. So if you are an active member of Silver and you're then you will get all of this. So go to optionpit.com/xmissgift. I want to thank everybody for coming, and I hope you have a great day.